Hey everybody, welcome back to today's show where we're going to be taking a look at the S&P 500 reaching near record highs. Gold seems to be pulling back, and GameStop launched over 100% on the day, now seems to be pulling back big time intraday. Let's talk about all of it in today's show. Welcome back to the channel, guys. As we get started today, I just want to ask a quick favor. If you could hit the thumbs up button on this video, it really helps with the algorithm. Let's talk a little bit about what markets are doing. We see the S&P 500 pulling back here to start out the week. Same thing with the Dow and the NASDAQ, and the dollar index is actually selling off pretty hard. We'll talk about that in just a moment, as the euro and the pound also making nice moves in response to the dollar weakness. Gold's coming down here, and oil is actually up on the day. Now this week we have a couple big events. First, we have CPI, which will take place this Wednesday morning. We have PPI, which will happen on Tuesday. And at the same time, we have, I believe on Wednesday, we have retail sales, which is also a very important figure. So this week is an action-packed week in terms of market news. And we're going to talk about how I'm positioned for it, as well as what I think could happen if we get a hotter print on CPI and PPI. So when taking a look at recent inflation reports, we've actually seen a 3-month uptrend on inflation on the year-over-year figure from the CPI. We're looking specifically at the blue levels, which are the US inflation rate. And so as we see this, we go into this week with a very high expectation for inflation to actually start to come down. If we do see inflation come in light on the producer price index, which tracks wholesale prices on Tuesday, and the consumer price index on Wednesday, which of course, tracks like how much a box of cereal at the grocery store costs, that sort of thing. It's a basket of those sorts of items. The question will be whether or not, the market gets what it wants here. If we see inflation start to cool, what that could mean is that the Fed may look to cut rates sooner, and that would be really good for the financial market in terms of specifically the stock market. Now, a cool inflation print would be bearish for the dollar specifically, because that would show that the economy is lightening up a little bit in line with some of the other economic reads that have been lighter than expected. I'll show you some of those really quick. When we take a look at PMI data on the manufacturing and on the services side, we've actually seen a bit of a lower than expected print in the latest round here in May. In the GDP department, we saw a big miss on the advanced GDP number that came out a few weeks ago. So we saw a 2.5% estimate. We got 1.6%. So there is some material slowing in the economy. There's one more big one we've got to talk about. So if I go to my NFP chart here, what we can see is that the jobs data came in really light on the latest chart. Now, if you're an Edgefinder user, check this out. I added this little chart down below. This is the actual minus the forecast in thousands for jobs. And this is the first one of magnitude that was lighter than expected on the NFP jobs report. So jobs started to lighten up. We also saw, as I mentioned, GDP, PMIs, a lot of the metrics here that have really started to dry up here in terms of economic growth. The question now is inflation going to come in line too? If it does, all good for the stock market, because then you're seeing, the economy slow and with it inflation come down. But if you get inflation sticky with that economic slowdown, beware of a potential sell-off in the stock market in the short term, as Fed interest rate expectations will probably remain higher for longer. So it's a really important week in the market. And this all falls on a week in which the S&P 500 is nearing its record all-time highs around 5,280. That's of course on the SPX here. So as we approach that level, again, I've made this point on our live stream today. I think what gets you to break out is probably a cooler than expected CPI and or PPI number. Now, if you really want to see a solid, breakout through the highs that has the magnitude to continue, you probably want to see both PPI, not PPP, we don't need 3, we just need 2, PPI and CPI, right? We want to see these numbers come in light. If they come in cool, then great. The market probably rips higher, and in that case, I'm probably just outright bullish, because then you have cooling economic data that's also in line with inflation. We're fine there, because then you probably see rate cuts on the way. But if you see hotter than expectations for PPI and or CPI, we probably see a respectable sell-off in the meantime. We could see a pullback all the way to 51.25 pretty quick if you get hot inflation reads. And I just want to pause to remind you that when it comes to these big events, I don't try and forecast what the inflation figure is going to be. I think there's mathematical models and super smart economic professors and people all over the globe trying to predict what CPI is going to be. I'm a trader. I will trade what happens and not try and forecast what an economic print is going to be. Let's talk briefly about gold. Here is a position that I currently have, and I wouldn't mind holding through the CPI event if I don't get trailed out of my current position. And I'll add some context here. So I went long on gold back at this level of support. We came down to this area, came back and retested it, and I went ahead and picked up a long position on GLD. I'll show you my P&L in just a moment, but as this market has started to kind of push off these lows and put in a higher low here and potentially a higher low forming here, we'll have to see. My big thing is I've trailed my stop loss below this market structure. I'm fine to hold on to the trade if it comes down or retests this area, but we better see a good response to that area. Otherwise, I'm going to go ahead and take my profits on this move. So I am floating at this point, 2 times my initial risk. At one point, it was 3 times my initial risk, but I am floating with a profitable position. So as we go into these inflation figures, the producer price index and the CPI on Wednesday, what I'm looking for is if that number is hot or cold, I actually like the idea of staying long gold simply because we've had a cool down in the economy, which in our Edgefinder scoring system is marked as a bullish read. So let me show you this. So if I just really quick isolate for metals, we can take a look at gold. And what we can see here is that we have a +6 score overall. And when we take a look at the economic data section, what we can see is that cooling economic data that I mentioned, GDP, PMI numbers, jobs numbers coming in light actually gives in our algorithmic calculations here a bullish print for gold or positive numbers here that contribute to the total score and has presented a bullish setup on gold. So I went long on gold because the Edgefinder setup here was there and I liked the technical entry. I managed my risk, and now I'll show you my current P&L on the trade. So if I go GLD, this is the ETF that tracks gold on the stock market. So I'm up about $3,000 on this position. We'll see if I can stay in the trade. By the way, if you're interested in trying our software, you can get 30 days access by clicking the link down below in the description and signing up for a trial or applying for one. Just use that link. It should be easily found down below in the description. And if you have any questions about the tool or you'd like to just go ahead and purchase the tool, what you can use is the very first link in the description, which will connect you with a real staff representative. If you have, some questions about whether or not this would be right for your trading style, or you would like to learn a bit more about how this functions, please message us. Use the first link down below in the description, and one of our support reps can help you with the functionality of our software. When looking at the euro, we have a little bit of a breakout on our hands. It seems like we had, some downtrend here, and then this big wick showed up, but then now we've kind of bottomed out again. The Edgefinders actually had a bullish reading on the Euro USD a couple last days. You can see getting a very bullish reading even. And that's in line with some of the weaker economic data out of the US, kind of contributing to favoring the Euro in the short term, as we may see a bit of a corrective move. For a little while there, it looked like the US economy was just not going to crack whatsoever, and the European one was just falling apart. That made for a really easy short the Euro by the dollar scenario. But for me now, we're seeing a little bit of the opposite. We're seeing the US start to slow in line with the others, and maybe that's due. Maybe there's due for some repricing here, where we could see the euro continue to trend higher for the time being. So I actually think that there may be some buy the dip opportunities here in my personal view. So if we retest this area, maybe I'll look to get long myself and keep a tight risk reward. Now that's all. There's a asterisk there, because if we get hot inflation data, the euro is probably going to slip. So we will just have to wait to the data to give us a little bit more of an idea. And if I enter any trades, I'll share that inside of our Discord group. Speaking of which, if you'd like to join our Discord channel, there's a free version and a paid version. The free version should be linked down below in the description. And if you'd like to find out how you can see the trades that are being taken by myself, Frank, and Ivan, you can use the first link to chat with a representative who can help you out. Now, please note, seeing our trades in depth is not a free option, because we get so many questions about this, and it's a service that we provide. We write up detailed explanations behind every single trade that we are taking, entries, exits, logic behind it, so on and so forth. If that's something that would be beneficial to you in your trading journey here as you try and learn how to trade the markets better, I highly recommend you consider our Discord service. Again, shoot us a message with the first link down below in the description. Finally, I figured we'd take a look at a couple of my current positions overall. I have some options trade on, my gold trade, which I showed you earlier, and a couple other things. So currently my XLK position is doing just fine. This is a technology ETF, so companies like Nvidia, Microsoft, Google, things like that can be found in XLK. So I have a long position and I've sold a covered call, which is, flat so far. VOO, so this is a long position on the S&P 500 that I have, but I'm taking a little bit of a loss here so far in unrealized gains on the calls that I sold for May 17th at a strike price of 480. I'm long GLD. I also sold puts on SMH, which is going very well. We're up $1,400 or so on that trade. TAN is a solar panel or a solar ETF, a solar company ETF, doing really well on that one and may get called away from my shares actually from this covered call that I've sold. Bitcoin, I'm short, about flat on the trade. TLT, I'm also long on with covered calls that I've sold, which are doing quite well, but the overall position is still in the red. So there's a update of all of my current positions on my brokerage that I use, WeBull, which is linked down below in the description. If you're looking for a broker and you'd like some free sign-up perks, check them out down below in the description. There's a couple great free ones. You can get a welcome bonus for some brokers. If you're outside of the US and you want to trade CFDs, there might be a great broker there for you. Again, there's a list of brokers. They offer some great perks to my subscribers. So check them out. It's free money. Why not? And also you'll be supporting my channel if you choose to use my links. Thanks very much for watching, guys. Trade safe. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.